Based on the historical data and forecast, Bitcoin shows a mixed trend with periods of consolidation and volatility. The support price remains consistently at $103,900, while the resistance fluctuates around $109,300. The RSI indicates that the asset is generally within a neutral range, occasionally dipping towards oversold conditions, below 42.4, and approaching overbought levels, around 63.6. The Bollinger Bands suggest periods of increased volatility, with prices frequently touching or crossing the upper and lower bands. Considering this, I propose a combined strategy incorporating elements from all three indicators. My recommended strategy is to initiate a long position at $105,300, coinciding with the forecast price and a potential bounce from the lower Bollinger Band. A stop loss should be set at $103,900, aligning with the established support level to mitigate potential losses. The initial target price will be $110,200, near the recent resistance level and a significant profit zone. If the price reaches $110,200, we will reevaluate the situation and adjust the stop loss to break even to protect profits. Furthermore, if the RSI falls below 20, indicating a strong oversold condition, we will consider exiting the position or tightening the stop loss. Conversely, if the RSI exceeds 80, suggesting an overbought scenario, we will consider taking profits or reducing the position size. This adaptive approach will allow us to capitalize on potential upside while managing risk effectively. Based on the historical data and forecast, Ethereum shows a fluctuating trend with periods of consolidation. The RSI consistently fluctuates around the 50 mark, indicating neither strong overbought nor oversold conditions, except for a brief dip to 46.2 on June 4, 2025. The Bollinger Bands have been widening and narrowing, suggesting periods of increased and decreased volatility. The forecast for the next week predicts a slight downward trend, starting at $2,650 and gradually decreasing to $2,590. Considering the support level at $2,530 and the recent RSI readings, I recommend a long position when the price touches the support level of $2,530. The stop loss should be set just below the support at $2,480 to limit potential losses. A target price of $2,630, near the resistance level, can be aimed for to secure profits. To refine this strategy, we can incorporate the Bollinger Bands. If the price approaches the lower band while the RSI is below 30, it signals a potential buying opportunity. However, given the forecast's slight downward trend, a more conservative approach is warranted. Therefore, I suggest entering a long position at $2,590, placing a stop loss at $2,540, and targeting $2,670. This strategy combines the support level and the Bollinger Band's potential for a bounce, while the forecast provides a cautious outlook. This portfolio is the most efficient because it combines the most reliable indicators and the forecast to maximize returns. Based on the historical data and forecast, XRP has shown a slight downward trend, consolidating between a support of $2.14 and a resistance of $2.25. The RSI fluctuating between 36.8 and 54.8 indicates periods of both oversold and overbought conditions, but generally staying within a neutral range. The Bollinger Bands suggest periods of volatility, with the price occasionally touching the upper and lower bands. Considering these factors, a conservative strategy focusing on short-term price movements within the established range is recommended. Therefore, I propose a strategy that combines RSI and Bollinger Band signals. We will initiate a long position when the price touches the lower Bollinger Band and the RSI is below 40, indicating an oversold condition. The entry price would be $2.12. A stop-loss order will be placed slightly below the support level at $2.13 to limit potential losses. The target price will be set at the resistance level of $2.25, aiming to capture a potential upward movement. This strategy offers a balanced approach, capitalizing on short-term volatility while mitigating risk with clear entry, stop loss, and target levels. Based on the historical data and forecast, BNB shows a slight downtrend recently, with the forecast prices consistently below the recent closing prices. The RSI values fluctuate between 41 and 57, indicating neither strong overbought nor oversold conditions. The Bollinger Bands have been relatively stable, with the price occasionally touching the upper and lower bands. Considering these factors, I recommend a moderately bullish strategy. We will initiate a long position when the price touches the lower Bollinger Band. The entry price will be $647. The stop loss will be set just below the lower Bollinger Band at $632 to mitigate potential losses if the downtrend continues. The initial target price will be the recent resistance level of $673. To refine this strategy, we'll incorporate RSI signals. If the RSI dips below 40, indicating an oversold condition, we'll enter a long position at $647. The stop loss will remain at $632. If the RSI rises above 70, suggesting an overbought condition, we'll take partial profits at $673 and move the stop loss to the entry price of $647 to secure gains and protect against a potential reversal. This blended approach, combining Bollinger Bands and RSI, should offer a balance of trend following and momentum trading, maximizing potential returns while managing risk effectively. Based on the historical data and forecast, Solana exhibits a downtrend with increasing volatility. The price has consistently faced resistance around $165 and support around $150. The RSI fluctuates between 38 and 55, indicating periods of both oversold and overbought conditions. The Bollinger Bands show widening bands, suggesting increased price fluctuations. Considering the forecast for the next week, which predicts a continuous decline to $142, I recommend a short selling strategy. Our strategy involves entering a short position at $151, capitalizing on the anticipated downward trend. The stop loss will be set at $158 to protect against unexpected price surges. The initial target price is $145, aiming to capture a significant portion of the forecasted decline. If the price reaches $145, we will adjust the stop loss to break even at $151 and set a new target price at $143, securing profits while allowing for potential further downside. This approach combines technical indicators with price action to maximize returns while managing risk effectively. Based on the historical data and forecast, Dogecoin demonstrates a downtrend with decreasing forecast prices. The support price is consistently at $0.17, while the resistance fluctuates around $0.179. The RSI indicates oversold conditions on several days, particularly around $0.17, suggesting potential for a temporary bounce. The Bollinger Bands show a narrowing range, indicating decreasing volatility and a potential breakout. Considering these factors, I propose a contrarian strategy focusing on short-term gains. My recommended strategy is to initiate a long position when the RSI dips below 38 and the price touches the support level of $0.17. The entry price will be $0.17. A stop loss should be placed just below the support at $0.167 to mitigate potential losses if the downtrend continues. The target price will be set at the nearest resistance level of $0.185, aiming for a quick profit. This strategy leverages the oversold RSI and a consistent support level, while the stop loss protects against further downside risk. This is a high-risk, high-reward strategy suitable for experienced traders. Based on the historical data and forecast, TRON has been fluctuating within a range, with support at $0.266 and resistance at $0.275. The RSI has generally been between 47.8 and 67.5, indicating periods of both oversold and overbought conditions. The Bollinger Bands have been relatively narrow, suggesting low volatility. The forecast price for the next week predicts a slight downward trend, hovering around $0.278, $0.279, $0.277, $0.278, $0.276, $0.277, $0.278. Given this, I propose a strategy combining RSI and Bollinger Bands. I recommend a long position entry at $0.276, coinciding with the lower Bollinger Band touching the forecast price and the RSI nearing oversold territory. Set a stop loss at $0.266, just below the established support level, to protect against a significant downward movement. The initial target price should be $0.287, aligning with the upper Bollinger Band and previous resistance. If the price reaches $0.287, consider a partial profit booking and a trailing stop loss around $0.28 to capture further upside potential if the trend continues. This strategy aims to capitalize on short-term price fluctuations within the established range, using technical indicators to identify optimal entry and exit points. Based on the historical data and forecast, Cardano shows a downtrend. The RSI consistently remains below 50, indicating bearish momentum. The forecast for the next week predicts a continued decline, with prices dropping to $0.578. The support level is consistently at $0.625, while the resistance is at $0.717. Considering these factors, I recommend a short position. Enter a short position at $0.633, with a stop loss placed slightly above the resistance level at $0.72 to protect against potential upward spikes. The initial target price should be set at $0.6, aligning with the forecast and support level. To refine the strategy, I'll incorporate the Bollinger Bands. The price is currently trading below the lower band, further confirming the downtrend. If the price breaks below $0.6, indicating further bearishness, adjust the target price to $0.578, coinciding with the forecast. Conversely, if the price approaches the upper Bollinger Band, consider tightening the stop loss to $0.705 to secure profits and mitigate risk. This dynamic approach, combining RSI, Bollinger Bands, and forecast data, aims to maximize returns while managing potential losses in this declining market. Based on the historical data and forecast, Sui exhibits a downtrend, particularly evident in the recent forecast prices. The price is currently near the support level of $2.95. The RSI values fluctuate between 37.5 and 52.9, indicating neither extreme oversold nor overbought conditions. The Bollinger Bands show that the price has been trending towards the lower band, suggesting potential downward momentum. Therefore, a short position strategy is recommended. We will enter a short position at $3.02. To mitigate risk, a stop loss will be set at $3.16, just above the recent high. The initial target price will be $2.76, aligning with the forecast price for June 22, 2025. To refine the strategy, we will incorporate RSI and Bollinger Band signals. If the RSI falls below 20, indicating an oversold condition, we will consider covering the short position. Conversely, if the price touches the lower Bollinger Band, it could signal a potential bounce, prompting a reassessment of the short position. The portfolio will prioritize the short position at $3.02 with a stop loss at $3.16 and a target price of $2.76, adjusting based on RSI and Bollinger Band signals for optimal risk-reward. This approach balances the downtrend prediction with dynamic adjustments based on technical indicators, aiming for high returns while managing risk effectively. Based on the historical data and forecast, Bitcoin Cash exhibits a clear upward trend, consistently testing and breaching resistance levels. The RSI consistently hovering above 50 indicates strengthening momentum. The Bollinger Bands show the price trending towards the upper band, further confirming an upward trajectory. My recommended strategy is a long position, capitalizing on this bullish momentum. I suggest entering a long position at $444. Given the support level at $419, I set a stop loss at $419 to mitigate potential losses. The forecast predicts prices reaching $470, therefore, I set a target price at $470, aiming for a substantial profit. To refine the strategy, I'll incorporate RSI and Bollinger Band signals. If the RSI dips below 30, indicating an oversold condition, I'll consider a secondary entry at the prevailing price. Conversely, if the price touches the lower Bollinger Band, I'll also consider a secondary entry. The stop loss would remain at $419 for both entries. The target price remains at $470. This combined strategy leverages both momentum and volatility indicators to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Ethena shows a downtrend, especially with the recent forecast prices consistently below $0.3. The RSI values fluctuate between 38.7 and 55.3, indicating periods of both oversold and overbought conditions. However, the recent RSI values are trending downward, supporting the bearish outlook. The Bollinger Bands have been contracting, suggesting decreasing volatility. Considering these factors, I propose a short selling strategy. We will initiate a short position at $0.307 with a stop loss placed at $0.319, just above the forecast high for the week. The initial target price will be $0.275, aligning with the forecast low for the week. To refine the strategy, we'll incorporate RSI and Bollinger Band signals. If the RSI drops below 20, indicating an oversold condition, we'll consider covering the short position and potentially reversing to a long position. Conversely, if the price touches the lower Bollinger Band, it might signal a potential bounce, prompting us to reassess the short position and potentially tighten the stop loss. If the price reaches the target of $0.275, we will take profit. However, if the price fails to reach the target and the RSI rises above 60, indicating an overbought condition, we will consider exiting the short position at $0.291 to minimize losses. This layered approach balances risk and reward, adapting to the evolving market dynamics. Based on the historical data and forecast, Kaia shows a volatile trend with a recent upward momentum. The price has been fluctuating between a support of $0.145 and a resistance of $0.172. The RSI indicates periods of both oversold and overbought conditions, with the most recent values nearing the 80 threshold, suggesting a potential pullback is possible. The Bollinger Bands show that the price is currently near the upper band, further reinforcing the possibility of a short-term correction. Considering these factors, I propose a strategy combining RSI and Bollinger Bands to capitalize on potential price movements. My recommended strategy is to initiate a short position at $0.154, anticipating a pullback towards the support level of $0.145. A stop loss should be placed just above the upper Bollinger Band at $0.174 to protect against unexpected upward movements. The target price for this short position is $0.145, aligning with the established support level. This strategy leverages the overbought RSI and a proximity to the upper Bollinger Band to predict a short-term downward correction. The potential return on this trade is significant, given the relatively close proximity of the entry price, stop loss, and target price. Based on the historical data and forecast, reserve rights is showing a downtrend. The price has been consistently declining over the past 2 weeks, and the forecast for the next week suggests further downward movement. The RSI values have generally been below 50, indicating a bearish momentum, and the forecast prices are consistently below the recent closing prices. The Bollinger Bands also suggest a contracting range, which often precedes a significant price movement. Considering these factors, a short selling strategy is recommended. We will enter a short position at $0.00648, placing a stop loss order at $0.00624, just above the support level. The initial target price will be $0.00583, aligning with the forecast price for June 22, 2025. To refine the strategy, we will incorporate the RSI and Bollinger Bands indicators. If the RSI reaches 30, indicating an oversold condition, we will consider tightening our stop loss to $0.00643. Conversely, if the price touches the lower Bollinger Band, we will consider adjusting our target price to $0.00578, anticipating a potential bounce. This dynamic approach allows us to adapt to changing market conditions while maintaining a focus on the overall downtrend. The portfolio will be 60% short selling, 20% RSI strategy, and 20% Bollinger Band strategy. This allocation prioritizes the primary short selling strategy while incorporating flexibility through the other two indicators. Based on the historical data and forecast, Raydium exhibits a downtrend, particularly evident in the recent forecast prices. The RSI consistently remains below 50, indicating a prevailing bearish sentiment. The bottom of the Bollinger Bands has been trending downwards, further reinforcing this negative trend. Therefore, a short position strategy is recommended. We will enter a short position at $2.15. A stop-loss order will be placed at $2.4, just above the recent resistance level and the upper Bollinger Band to mitigate potential losses if the price unexpectedly reverses. The initial target price will be set at $1.89, aligning with the forecast price for June 21, 2025. To refine the strategy, we will incorporate a dynamic trailing stop-loss. Once the price reaches $2.1, we will adjust the stop-loss to $2.14. If the price continues to fall, reaching $1.91, we will adjust the stop-loss to $1.91. The final target price will be $1.89. This approach combines an initial short position with risk management and profit-taking opportunities, capitalizing on the anticipated downtrend while protecting against adverse price movements. This portfolio is expected to generate high returns. Based on the historical data and forecast, Artificial Superintelligence Alliance exhibits a downtrend. The price has been consistently facing resistance around $0.719 and has been declining. The forecast for the next week projects further price decreases, reaching as low as $0.642. The RSI consistently hovers around the oversold territory, with values fluctuating between 39.5 and 53.8. The Bollinger Bands are narrowing, indicating decreasing volatility, and the price is often near the lower band, reinforcing the bearish sentiment. Therefore, I recommend a short selling strategy with an entry price of $0.698. A stop-loss should be set at $0.719 to protect against potential upward movements. The initial target price is $0.642, aligning with the lowest forecast price. To optimize returns, I suggest a tiered approach. After reaching the initial target of $0.642, consider moving the stop-loss to break even to protect profits. If the price continues to decline, a secondary target price of $0.635 can be established. This strategy combines trend analysis, RSI signals, and Bollinger Bands to identify optimal entry, stop-loss, and target levels. The short-selling approach aims to capitalize on the anticipated downtrend, while the tiered target system allows for maximizing profits and minimizing risk. This is a high-risk, high-reward strategy suitable for experienced investors. Based on the historical data and forecast, Jupiter shows a downtrend. The price has been consistently declining from June 2, 2025, to June 15, 2025, and the forecast for June 16, 2025, to June 22, 2025, indicates further decline. The RSI consistently remains below 50, with values frequently dipping below 40, suggesting a potential oversold condition. However, given the overall downtrend, I recommend a short selling strategy. We will enter a short position at $0.43. The stop-loss will be set at $0.44 to protect against a potential short-term reversal. The initial target price will be $0.391, aligning with the forecast for June 20, 2025. To refine this strategy, we'll incorporate the Bollinger Bands. The price has been trading below the lower band for an extended period, which confirms the downtrend. If the price touches the lower band, consider tightening the stop-loss to $0.424. If the price reaches the target price of $0.391, consider taking partial profits and moving the stop-loss to the entry price of $0.43 to protect gains and potentially ride further downward momentum. This combined RSI and Bollinger Bands approach provides a robust risk management framework for this short selling opportunity. Based on the historical data and forecast, Axelar shows a volatile trend with a recent upward momentum. The RSI values have fluctuated significantly, indicating periods of both oversold and overbought conditions. The Bollinger Bands suggest increasing volatility, with prices frequently touching or crossing the upper and lower bands. Considering the support price of $0.424 and the resistance of $0.51, and the forecast data suggesting a price range between 0.382 and 0.424, I recommend a strategy combining RSI and Bollinger Bands. The strategy will involve a long position when the RSI dips below 35 and a price touches the lower Bollinger Band. Specifically, I suggest entering a long position at $0.382, with a stop-loss placed at $0.37. The initial target price should be $0.424, aligning with the support level. If the price reaches the support level, we can move the stop-loss to break-even, $0.382. The second target price will be $0.51, the resistance level. This strategy aims to capitalize on the potential upward momentum while mitigating risk through strategic stop-loss placement and target adjustments. This approach balances the indicators to maximize potential returns with careful risk management. Based on the historical data and forecast, Solana exhibits a downtrend with increasing volatility. The price has consistently faced resistance around $165 and support around $150. The RSI fluctuates between 38 and 55, indicating periods of both oversold and overbought conditions. The Bollinger Bands show widening bands, suggesting increased price fluctuations. Considering the forecast for the next week, which predicts a continuous decline to $142, I recommend a short selling strategy. Our strategy involves entering a short position at $151, capitalizing on the anticipated downward trend. The stop loss will be set at $158 to protect against unexpected price surges. The initial target price is $145, aiming to capture a significant portion of the forecasted decline. If the price reaches $145, we will adjust the stop loss to break even at $151 and set a new target price at $143, securing profits while allowing for potential further downside. This approach combines technical indicators with price action to maximize returns while managing risk effectively. Based on the historical data and forecast, Bitcoin Cash exhibits a clear upward trend, consistently testing and breaching resistance levels. The RSI consistently hovering above 50 indicates strengthening momentum. The Bollinger Bands show the price trending towards the upper band, further confirming an upward trajectory. My recommended strategy is a long position, capitalizing on this bullish momentum. I suggest entering a long position at $444. Given the support level at $419, I set a stop loss at $419 to mitigate potential losses. The forecast predicts prices reaching $470, therefore, I set a target price at $470, aiming for a substantial profit. To refine the strategy, I'll incorporate RSI and Bollinger Band signals. If the RSI dips below 30, indicating an oversold condition, I'll consider a secondary entry at the prevailing price. Conversely, if the price touches the lower Bollinger Band, I'll also consider a secondary entry. The stop loss would remain at $419 for both entries. The target price remains at $470. This combined strategy leverages both momentum and volatility indicators to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Jito shows a general upward trend, although with significant volatility. The RSI values fluctuate between 41.8 and 65.2, indicating periods of both oversold and overbought conditions. The Bollinger Bands have widened recently, suggesting increased market uncertainty. Considering these factors, I propose a combined strategy leveraging RSI and Bollinger Bands for optimal returns. We will initiate a long position when the RSI dips below 20, indicating an oversold condition, and the price touches the lower band of the Bollinger Bands. The entry price will be $1.53. The stop loss will be set just below the lower Bollinger Band at $1.52 to mitigate potential losses. The initial target price will be the midband of the Bollinger Bands, around $1.87, with a secondary target at the upper band, $2.18. Following the forecast data, the price is expected to remain around $2.13 to $2.2. Therefore, after reaching the first target price of $1.87, we will partially close the position and move the stop loss to the entry price of $1.53 to protect profits. If the price reaches the upper Bollinger Band of $2.18, we will close the entire position. This strategy combines the momentum indicated by the RSI with the volatility assessment provided by the Bollinger Bands, aiming for high returns while managing risk effectively. The final target price will be $2.24.